What is going on, everybody? It is your boy Stas here. Welcome back to another video. So check it out, man. We have a lot to go over today because we have a lot going on this upcoming week. Maybe not so much when it comes to earnings, although we do have a couple of companies that we will break down today that are set to report earnings. But we have a lot going on this week when it comes to the Federal Reserve, right? Because we have the federal funds rate coming out, the projections, the FOMC statement, and the good old press conference, the Q&A with Jerome Powell. So, yeah, needless to say, guys, you better be ready. I have freaking 2 coffees right here, guys, so you know I'm ready. I have my homemade one right here, and I have a Starbucks one. Don't even ask. We're not going to get into what happened today with Starbucks, guys. But, yeah, if y'all find value, hit the like button. Make sure to subscribe. And don't forget to get up to 16 free stocks for Moomoo, each up to $2,000. Link down below. We'll cover those details later. And with that being said, guys, cheers. Let's dive right into the video. So before we dive into the FOMC projections, all that good stuff, which we will do that in a minute, let me show you all what's been going on here with the indexes, which on Friday, let's just say it was not the best way or the best end to the week. Let's just put it that way, guys, because we had the S&P 500 go down $5.40. Well, I guess SPY did, which is the ETF that tracks the S&P that everybody looks at, right? Down 1.2% on the day. And you guys can see here on the 30-minute chart, to me, this looks like, I don't know about you, but to me, this looks like we are heading to the lows. Well, we are at the lows from the beginning of this month, about 10 days ago, where we hit $442 on SPY. So right now we have, this looking pretty bearish, no doubt. You guys can see it. We're under the moving averages. We're holding on by a thread at 442, and Triple Q is looking pretty bearish as well. We have lower highs being put in on this 10-day, 30-minute, and at the same time, we're at a huge support from a couple of days ago, about 10 days ago, being about 370, which if we fall under that point, guys, we could be selling off even more. And just like SPY, Triple Q is also under the moving averages on this 30-minute chart. And the 20-day chart shows you how big this 370 spot is. And on SPY, you can see how important this spot is right here at about 440, 442. So get ready, guys. This is going to be a huge, huge week for the markets, no doubt. And another thing worth mentioning, guys, is the VIX went up over 7.5% on Friday, which we haven't seen many of those days recently. But again, 7.5%. We had a nice pop in the VIX, maybe more to come. We shall see, guys. So let me just talk to you all about the projections with the FOMC very quickly. Then we're going to dive into these individual stocks that I'm looking at this week, 5 of which are set to report earnings, and 2 of them at the end, well, the last 2 are not set to report earnings, but they're interesting ones that I'm looking at for this week regardless, right? Regardless of whether they're reporting earnings or not. So let me actually pull it up here and show you guys what is going on. Give me a second. Hit that like button, by the way, if you're finding value, and make sure to subscribe. It's free, by the way. It's freaking free, guys, and I think 70% of you are not subscribed based on my analytics, or 60%, whatever the number is. And if that's you guys, what are you doing? Make sure to subscribe. Hit that notification bell. I appreciate you all as always. So check it out here, guys. We have a lot going on, not only in the U.S., but we have a lot going on, in other countries as well. CPI over in GBP, right? We have, let's see here, anything else? PPI, GBP, right? We also have, let's see, anything going on in Canada? Not seeing anything in Canada, but either way, forget that. We're going to focus on the U.S. right now, which on Wednesday, this upcoming Wednesday, the 20th of September, at 2 p.m., we have the federal funds rate, you guys can see right here, which is going to be coming out. And newsflash, it's not supposed to go up, which is good, guys, at least in the short term, right? This shows you the Fed funds rate essentially is the interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. You guys can see that. Now it's at 5.5, and it's projected to stay the same right at 5.5, which is good. Then we also have the FOMC economic projections. We'll get more info on where their heads are at in terms of the economy and so forth. The FOMC statement, a little bit more of that, right? This is, scheduled 8 times per year, if you guys didn't know. And it's something worth watching for sure. And of course, we have the good old FOMC press conference, which is what we're all looking forward to, right? Which is with Jerome Powell. We get the Q&A. We get a lot of insight on the economy, interest rates, where they're, what they're looking to do moving forward with interest rates. Are we going to get more hikes than expected, or are they more towards the end? Are they going to cut rates at some point anytime soon? We're going to get more insight on that, which is very important for the overall stock market, as I'm sure you guys could imagine. So this is all on Wednesday. Again, the Fed funds rate, the statement, all that comes out at 2 p.m. on the East Coast, that is. And then at 2:30, we have the FOMC press conference, which is again the Q&A. Powell gives a statement, all that good stuff. So what do you guys think? Let me know your thoughts in the comments, man. This is going to be a big week for the economy, for the stock market, really for everything. And I guess the good thing is we're not going to get another rate hike, at least now, but we might get one pretty soon here, maybe another one by the end of the year. We shall see how that plays out. But overall, the companies that I'm looking at, the first one is FedEx, ticker symbol FTX, which on Friday did not do that well. Surprise, everything was down. I'm not surprised. Down 1.1% for FedEx, and this stock has been down for the past couple of weeks. Not a lot, not really much at all, but still down about 15, 16 bucks, or about 7% down from where it was in the end of July. And this is actually interesting considering UPS has been destroyed. I'm not sure if you guys have seen that stock, but this thing was at 200 bucks by the end of April, which, that was about a couple months ago, and now it's at 160. So that's actually down a lot. About 20% in the past couple of months, whereas FedEx is not down nearly as much. But either way, FedEx is set to report earnings this upcoming week, I believe on, Tuesday or Wednesday. They're on Wednesday, I believe. Yeah, the 20th after the market. So they're looking to do EPS of $3.73 versus $3.44 from last year. So that's going to be up year over year, which is good. And revenue on the flip side, well, guys, is not going to be up. Revenue last year was $23.58 billion, and this year on average, they're looking to do for this quarter $21.8 billion of revenue. So that will be down, projected, of course. These are all estimates, so keep that in mind. But it will be down 1.5 to 1.7 billion year over year, or around 7.6% down year over year. So FedEx is one that honestly still looks pretty good. The uptrend's holding. You guys can see right here, that's looking juicy. But at the same time, we have a death cross on the 4-hour chart. We do have lower highs being made, and we're not really confirming a pop as of right now. We'll see. Time will tell. But that's kind of what I'm seeing here on the charts with FedEx and the quick numbers breakdown for this upcoming earnings report. And the next one that I'm looking at, guys, is General Mills, which this broke trend a while ago. Geez, guys, that was back in June. And since that point, we broke 80. Now we're at what? 65 bucks. We're down about 20% since June, and about almost 30% since the middle of May, which is actually brutal. So they're looking to do EPS of $1.09 versus the $1.11 from last year, and revenue is looking to come in at $4.89 billion versus $4.72 billion from last year. So that is going to be up year over year on revenue around 3%, but EPS pretty flat, actually down year over year. So they're looking to report earnings, I believe, on, let me see here, guys, the 20th in the morning, which I believe is on Wednesday. So keep your eyes on them. And by the way, guys, I'm not a fan at all of this chart. We have a death cross, clearly in a downtrend, no signs of a reversal. So this is one that I'm staying away from, especially as a trade, maybe as a long-term investment. There could be some value here, but I'm not the biggest fan of this business overall in general, so I'm not going to touch it personally. But maybe for you, it's down 30 bucks a share. Might be worth looking deeper into, right? So let me see this one here. AZO, which is AutoZone. When are they going to do a split, guys? Geez, their stock price is $2,500 a share. They have to do a split, in my opinion. I don't know what's going on, but either way, on Friday, this stock went down 2%, about $46 in the red, and this is actually one that's slowly been reversing. So we can see they have a golden cross here on the 4-hour chart. You guys see that? We have the 50 SMA crossing above the 180 SMA with earnings coming up. So this is one that's slowly reversing. I'm liking it here. You guys can see in the past couple of days, I think on the 8th of September, we took out the highs from the middle of July, which is good. So that's, showing momentum's in the Bulls' favor right now. So we have earnings coming up, I think, on the 20th as well. Let me see, guys. A lot of these are later in the week. 19. So they're on not Wednesday, Tuesday. So they're looking to do EPS of $45.18 versus $40.51 last year, and they're looking to do revenue of $5.62 billion versus $5.35 billion last year, up 5% year over year. So they're looking pretty good on EPS and revenue year over year, and that's probably, I don't want to say that's probably why the stock's up, but I'm sure the stock's expecting that. That's probably priced in already. I don't know. But this thing's up around 10% off the lows. And again, like I said, it's reversing. So let's put some alerts here. I'm going to set one at 25.50. Let me do that now. 25.50. Mark is that we're above. Let's do that. Set that. Boom. And if we do break out of there, guys, 2,600, maybe even higher, that's where we could be going. So Darden Restaurants is another one, guys. And actually, before we dive into this one, don't forget to get up to 16 free stocks for Moomoo. You guys like that? Use that link down below, or just go to stocksurfest.com/Moomoo. Open up your account and fund it with at least $100. You get 5 stocks right off the bat. And listen to this, guys. Fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks. And guys, for a limited time, if you fund your account at least $5,000 on top of those 15 stocks, you also get a free share of either Tesla stock or Google stock, which makes this promo a no-brainer. So guys, what are you waiting for? Use that link down below. And with that being said, cheers. Let's continue on here with Darden Restaurants, which you guys probably know, maybe not. This owns a lot of your favorite restaurants. Maybe not your favorite restaurants, but a lot of restaurants that you've been at. I believe they own Olive Garden, right? Bahama Breeze, right? Capitol Grill, Yard House, a bunch of other ones that I can't remember now off the top of my head, but they own a bunch of restaurants, guys, and this stock's actually down $25 almost heading into earnings, about 13-14%. They're looking to report, I think, on Wednesday, or actually no, Thursday in the morning. So they're looking to do EPS of $1.73 versus the $1.56 from last year. So that's going to be up year over year, and revenue's looking to come in at $2.71 billion from versus the 2.47 from last year, up 9.7% year over year. Pretty good there, if you ask me, guys. And let's see here again. It's downtrending over the past couple of weeks. We have seen that pull back, but overall, in the grand scheme of things, guys, we're still holding trend here on Darden. So let's see, maybe these earnings that come out could spark a rally in the stock. Possible, but right now we're not getting it. The next one that I'm looking at is Stitch Fix. SFIX is the ticker, guys. This is a more risky stock. It is a penny stock. I think anything under $5 is a penny stock. They're looking to do EPS of -21 cents, which is good versus the -64 cents from last year. But revenue, guys, is going to be down a lot year over year. $371 million roughly is the estimate for this quarter, and last year they did $481 million. That's going to be down roughly 23 to 25% year over year. A lot of that's probably priced in. Who knows? Maybe not. The chart's not looking good, guys. We have a head and shoulders. It's playing out. We're under the moving averages. The bears are clearly in charge. So they're actually set for tomorrow, Monday, after the bell, Stitch Fix. So keep your eyes on them to see how it does, how it plays out. 2 more stocks, guys. The first one is Tesla. They're not set to report earnings this week, but I want to touch base with you all on what's going on here. We have this inverse head and shoulders, like you all probably remember. We called it out last week. Left shoulder, head, right shoulder. We're above the moving averages. Now we're heading into this week, pushing at 280, right, which is right by this, multi-week resistance. 280 is a big spot for Tesla. That's actually where we failed back in the beginning of July. So if we're able to push through that this week, maybe we could fill the gap to 290, 300, which was the high you guys can see from the middle of July. That is totally possible. And the next one, the last one that I'm looking at for this week, which is interesting, is JP Morgan. JPM's the ticker. You guys can see this was at 159. Boom, pulled down to 140. We got the buying, guys, at 140, which is huge considering that was the high. We talked about this all from the beginning of the year, all throughout pretty much the end of June, right? So the fact that we held 142, 143, bounced off it, now we're pushing 150, right by the 180 SMA on the 4-hour chart. It's worth watching because if that breaks, we take that out, man, this could be off to the races. So what do you guys think? Let me know your thoughts in the comments. Feel free to hit that like button and to subscribe. It's free. Follow me on Twitter as well at Stas Talk Stocks. It's linked down below, and I'll catch you guys in the next video.